Hey, what's up, guys? Trader Tim from EminiMind here. Wow, what a day. It's been an awesome week so far in the markets, and just wanted to run through today's trades. We have had four 15-minute opening range breakout trades go to plus 20, which one time in the last 5 years, I had 1 week where I got plus 20s all 5 days. So we'll see if we can do it again tomorrow and round out the week. But 1 minute trades, hammers, inverted hammers, just on fire. Had a really sweet halfway back trade today as well. So you've heard me say it time and time again. If you can get through the slow periods when we have a few days or even, the last 2 weeks, we're pretty slow and choppy. We had a couple good days in there, but really a lot of no trade, sit on hand sessions. If you can get through those sessions being patient and waiting for good setups, boy, when they come, it's like taking candy from a baby. It just feels so easy. The charts are so clean, easy to read. Just all in all, it's better to trade more on the good days when the market is giving you a lot of entries versus trying to force the market's hand when there's not any setups. So, first trade today, kind of like yesterday, today we gapped down just a smidge and moved our way up towards the gap fill, but we did not quite fill it. And we got this inverted hammer here. I decided to take this short because we came within a couple ticks of the gap fill and we had this 21 kind of pointing down. And that's going to be the theme of today's video, using the 21 to really bolster or help give you the best trading opportunities. Where are the best setups going to be? They're when we come back to the 21. And so this first one I took short, ended up break even on that one. It did get a strong reaction right out of the gate, which was nice to see with this big red bar. But it didn't get its plus 6. Then we bounced again to the 21, and we did have a little bit of a higher low here, but we also had a lower high, so kind of a triangle forming. And since we came up and kissed the 21, I decided to take another stab because I saw we got such a strong reaction on this first one. Even though it didn't go plus 6, at least, as soon as I got in, basically no heat, and then boom, it was plus 3 in, almost a matter of seconds, really. So then this next one did roll over nicely. It made its 3 red bar push, but I got the plus 6 down in here and took it off for a plus 6. And then we came back up to the 21 again. Down in here, we did have a low tick at 741, but as we rallied up here to the 21, I was looking for a short. We actually broke, if you use the high of the day, we broke the halfway back short, the 61.8. But since we came to the 21, I was still figuring we would, hold that trend if we can roll over at the 21. And so we got this inverted hammer here that I liked. And that one actually, the tail came just a little bit above the 61.8. But we didn't break the inverted hammer's low. So then when I drew up the long, and when we broke that long here, the 61.8, I actually drew up a halfway back short since we weren't getting an inverted hammer. Kind of switched gears and went over to the halfway backs and took the short there at 12.25. And that one came right to the tick. Sometimes they trade in a little bit, or sometimes they trade all the way to the 61.8, but that's why it's important when you're trading the halfway backs. You want to make sure that your distance between the entry, so take the 50%, round down, subtract the tick, and then to your stop, that 2-point stop, you want to make sure your stop is outside of the 61.8 to account for that wiggle room. Not every trade's going to, kiss the 50% and roll over just perfectly. Although more oftentimes than not, they do touch pretty cleanly, but you want that buffer, that little bit of wiggle room. And so that one rolled over super hard. Since I had the one winner on the day already, I decided to give it a little bit of wiggle room, meaning I didn't just rush in and trail each candle. And so I just started out, I drew the first halfway back like this, and then we kept going down. And so then I just switched to trailing swing highs. So we had one little swing high here, rolled over, another swing high, kind of made a double bottom, bounced, actually put my stop 2 ticks above this little double top here, rolled over again, bounced, rolled over again, bounced, and then this is where I got taken out. I put my stop 2 ticks above this candle's high. One subtlety to notice here. So I came in and when we broke the low of this candle, I put my stop 2 ticks above this candle's high. So that's breaking the low of the high bar, forming a lower high here on this candle. But notice how we did not break the actual low. When we came down, we didn't break the prior swing low. Technically, the most recent swing high is up here. So you can wait, if you wait for the swing low to break the actual swing low, you're going to catch kind of the next leg down more times versus tightening it a little more aggressively. But, we'd already come like 14 points. So I was more than thrilled with the trade already. So I didn't feel too bad getting a little more aggressive, especially because, to let it come all the way back up here, we're getting given back quite a bit. That was a 03, and then this is all the way down at like a 98. So that's 5 points. So I'm always kind of keeping an eye on the distance between where price is and where my current stop is. Once we get, 5, 6, 7 points, that's getting kind of far away. So if you want to be a little more conservative, you can wait for the actual swing low to break, or you can break the low of the high bar and then take your stop down. So got 14 points on that one, which was sweet. It ended up continuing down quite a bit. I do have a trader who is entering the halfway backs and then trailing the 1 minute bars, and that's also a fine trail approach. You just want to just be consistent with your exit approach and kind of trade the same way every time, so you're not bouncing around back and forth. So that was an awesome trade. And then the next one was 808. We had a low tick down here. I think it was 803, I believe, 804. Yeah, 804 low tick. We started to come back up. This dotted line was actually yesterday's low rather. And then this solid line is the 30-minute low. And notice how, the 21 is trending down. We got the low tick and pulled back to a halfway back. So I took that counter trend long, and it did make it to the 21, but I did get stopped out. It's a little bit hard to see in here, but it broke the candle's high right here to get me in, and then it pulled back. And on this little, let's see if I can mark it here so it shows up on the. So my entry was here at 82 1/4, and then it came down and stopped me out down here like 79 1/4, basically to the tick. So I got a -3 on that one, but it did get its push up to the 21. I was okay taking that one because we had enough room between the 30-minute low and the high of the candle, to at least get a +3 move. And, it did get that big move. It just came, 1 bar too late. So I got taken out on that one. And then this was another perfect placement right at the 21, bottom of the 30-minute range. Got to take that short every time. Short below or right at the 30-minute low underneath the inverted hammer. That one happened kind of quick, but again, strong push down, another +6. And then at that point, I, didn't want to get too greedy here, so I called it the morning. This higher low was okay, but seeing as we were in the downtrend, taking the trades in the direction of the trend is going to give you more momentum. A better setup would be this next long here, where we came back, we had the rally, and then we pulled back right to the bottom of the 30-minute range. Now we're inside the 30-minute range, and we're right on top of the 21, and look at how nice, strong that gets a nice push up off of that hammer. There were a couple more trades in the morning, but like I said, I called it quits there. But if we draw the full halfway back of the day, so from today's high to lows, we came up to this 50%. We had another inverted hammer in there. We also had a scroll forward, had a halfway back like so. That lined up with the larger halfway back short. So there's a couple opportunities there. And overall, yeah, it's just been a really, really good week, good day, much more opportunities than we've had in the last couple of weeks. And, just a big takeaway from this week. And as you compare, the really good trading days to the days that are slow and more difficult to trade, as long as you stick with trading at the 21, at least when you're starting out, once you get a little more experience and, a little more cushion in your account, then you can be a little more aggressive or take counter trend trades. But on days when the market is slow and choppy, the setups that I am taking end up being, the maybe one setup, the one time where we pull back to the 21 and roll over. It might be 45 minutes into the day. So you got to be patient and wait for the setups to come to you. Otherwise, I say this all the time, you don't want to just dig yourself a hole and then fill it back in the next week. So the winning trades will come. It's your job to be patient and disciplined and be able to identify when you shouldn't be trading on those slow days instead of forcing things. And then you'll really start to see progress. So I hope you have a great rest of your day, and we'll talk to you all soon.